Hello, my name's Chris Weston, Head of Research at IG. I've been involved in financial markets since the late 1990s, working in a trading and research capacity, dealing with both institutional and retail clients. And I know from my own personal circumstances that when people start embarking on their trading journey, they have an awful lot of questions they want answered very, very quickly. I want to look at 5 considerations there for every trader when they're embarking on their trading journey that they really need to be answered on a very personal level before they even start putting into practice a trading plan and creating some discipline within a risk management approach to trading, and ultimately how to survive and thrive in these financial markets. So I'm really looking at 5 key considerations that every trader should really think about for their own circumstances as they've just started getting into their trading journey. The first one, of course, is self-assessment. This is very personal to trading. Trading is a very personal situation. What is your circumstances, your personality, your lifestyle, your job? All of these factors really play into things like timeframes, how active I'm going to be in financial markets. Do I trade off 1-minute charts, 5-minute charts, an hourly chart, a daily chart or a weekly chart? Do I scalp markets? Am I a systematic trader, i.e. using computers to follow some sort of rule-based approach to trading? Am I a discretionary trader, which of course most of our clients are? They make their own decisions in markets. And of course all of this situation comes down into their own unique characteristics of the trader. Not one person is the same and not one trader is the same. And of course that's what you need to ask yourself, and how much time on your hands and how active can you be in the market? The second thing, of course, is what is your goal? What are you actively trying to achieve from a trading account? My own personal situation is I want to manage risk. I want to manage my capital, and effectively I want to grow the capital in my account. It's a question of how much I want to grow that capital and what sort of targets am I setting myself. Of course, that devolves down to the leverage that each product has, and the volatility within each product, and of course that comes down to risk management as well. But ultimately ask yourself, what are you trying to achieve from the account? Is it 5 to 10% pre-leverage? Am I trying to make $1 million overnight, which of course will require a huge amount of luck and not many people can achieve that? Or am I trying to have a measured approach to trying to grow the income or the account size that I have as well? Continuous improvement. We need to be the best person we can possibly be. We're in a very, very tough situation. We know we're up against algorithmic traders. We know we're against institutional traders who have a large amount of money. We need to work hard. We need to try and be the best person that we can possibly be. We need to have the best research. We need to have the most appropriate approach to risk. And of course that means hard work and dedication. Financial markets are aggregators of wealth. We need to take money from other people. So therefore we need to create an edge. We need to create something that's better than everyone else. We need to create a positive expectancy. And that of course is going to take a lot of hard work. Am I willing to learn but continue working and continue learning? And of course that involves a trading journal, writing things down. What mistakes did I make? How can I be better? What did I write down? Did it work? Therefore, can I do more of that? In life, you want to do more of something that's working, and that's the same in trading as well. Talk to people, get on forums and understand what's working for them, and will that work for you as well? So of course, continuous improvement is something that institutional traders will continually work at. It's what we call the holy grail. You always want to try and find a better edge than everyone else in the market. How do I manage ego and loss? Well, of course, this is a major situation. It should be part of everyone's trading plan when they finally do decide to come and put that into place. In society, we're told that we always have to be right, whereas actually in trading, that's not actually true. In ego, it's a very, very big characteristic. If I make a series of correct trades, of course, we go into a situation where we might try and increase the amount we place on a trade. And of course, that discipline that we had as part of a trading plan is thrown out of the window. Ego can be very, very destructive in trading as well. The best traders are generally the best losers. These are the people that can admit that their trading situation or their analytics was incorrect, and they can cut back on the trade. There's nothing with being wrong. Just don't stay wrong. And I think that's the issue. The best traders we see are the traders who can let their profits run and they can cut out of the trade when they know it's not working for them, rather than letting those losses run. And I think a really defining situation is that we don't always have to be right. If you look at this trading table that we have at the moment, this is our win-loss rate, and we can get 25% of our trades right and still make money. And this is the fallacy that a lot of people don't fully understand. If I'm getting 25% of my trades right and making money on them, I know I can still make money if I adopt a situation where I make 3 times what I make on my winning trades than on what I lose on my losing trades. If I was to target an 83% success record, I know that I can actually lose more on my losing trades than I make on my winning trades. So what do we target? Do we target a win-loss ratio or a risk-reward ratio? My personal situation is that I don't get every trade right, but I know that I have to make more on my winning trades than I lose on my losing trades. So this is an interesting situation that people need to think about. We don't always have to be right. In situations, we just potentially have to make more. So again, that needs to be food. But how do we deal with that loss? How do we deal with that ego is very, very important for people's portfolios. And of course, the fifth one for me is how do I run the account like a business? This is something that everyone needs to think about. If I was to open a pizza restaurant on Lygon Street, I'm not going to go in there knowing that I don't have an edge over the competition. I need to understand my costs. I need to understand the competition. I need to know what I'm really good at and which makes customers keep coming back. That gives me an edge, a positive expectancy. I need to understand the risks and how I manage those risks within the business. And all of those things will keep me going and surviving and thriving in a very competitive landscape. And that's exactly the same way that you should be treating the account with IG as well. Run it like a business, understand risks, costs, the product itself, and of course that can really put you on a path for prosperity as well. So these are the 5 main things that I like to look at before I start even thinking about trading plans. And of course most of these products actually take a consideration within the trading plan itself. We will be running a series of more education videos, and I hope you enjoy those going forward as well.